Hello and welcome to this session where we will be discussing the evolving deep tech landscape in South and Southeast Asia and the challenges and opportunities that it presents. I'm Deepshikha Monga, an editor at DealStreetAsia, and today I'm joined by two experts who have a wealth of experience from being on both sides of the proverbial table. Kiran Mysore is an AI researcher turned VC. He's a principal at the University of Tokyo Edge Capital Partners, or UTEC, an independent venture fund associated with the University of Tokyo and other academic institutions. UTEC is one of the largest deep tech funds in Asia, with assets under management of about $800 million. Kiran has led investments for UTEC in Singapore, India, and the US. Welcome, Kiran.
My pleasure. Thanks for having me here.
I'm also joined by Venkat Vallabhaneni, a serial entrepreneur turned VC. Venkat is the managing partner at Inflexor Ventures, an early stage venture capital firm that invests in B2B or enterprise startups that either have a deep tech play or have strong technology IP. Inflexor focuses on investments in India primarily. Welcome, Venkat.
Thank you. Glad to be here.
To kick things off, let's talk about your fundraising milestones. Both UTEC and Inflexor had hit fundraising milestones during the pandemic. In May, UTEC hit the first close of its fifth fund, which is targeting $275 million, while Inflexor closed its second tech fund at $81 million in July this year. How difficult was it to raise capital during the pandemic? And do you think these milestones represent the growing investment appetite among LPs for deep tech investments? Kiran, maybe you can go first.
Thank you very much. Yeah, we did. This is our fifth fund that we raised. And by the way, thanks for the introduction. And yeah, happy to be on this global panel. Kudos to Deal Street for all the work that you've been doing to support the ecosystem. And our fundraise was actually covered by Deal Street as well. So I'm very happy. This is our fifth fund that we raised, that we did a first close in somewhere around May this year and a final close around June, July. So it's about 30 billion yen, which is like close to $300 million. That brings our AUM close to 850 billion, as you said. I think a couple of things. It is true that I think a lot of institutions already have realized that it is important to back companies that have long-term impact, real-world impact on the economy as well, which means impact in the bits. By bits, I mean like software bits, but also in atoms, which means real world. So I think the institutional LPs understand that. Second, as you can see, the questions were always like, hey, are deep tech exits there? But you see companies like Moderna, companies like Tesla, we've had like a couple of $1 billion IPOs, which you can talk about later. So I think that is driving it as well. Third is the quality of the company. So I would say that wave one in Asia was about B2C. Wave two is B2B, which culminated just yesterday with Freshworks IPO. And wave three is deep tech. So LPs like that transition as well to see what is in the future. So that's, I think, some of the reasons. And the other thing is, as you can see, the funds that have good track record, that have good founders that they've already backed, that's another sort of thing as well. One of the things they like about us is, of course, we are Japan-based, where 2/3 of our investment is in Japan, but we also have global potential, and we invest 1/3 globally, which includes US, India, Singapore, etc. So that helps us to get LPs, mostly institutional LPs from Japan, as well as global. I think a combination of all these three things has led to us. And happily, institutions are also okay meeting people over Zoom and investing. However, I would say that building upon existing relationships has been okay, but building new relationship always is a tough thing, right? So hopefully I hope things open up as we go.
Okay. Thank you. Venkat?
Sure. Fundraising has been a very, very interesting journey for us, right? We are, India-focused domestic fund, right? And we got SEBI approval in February of 2020, right? That's when the COVID, actually hit, right? So right after COVID, right, we thought it's going to be very slow and we're going to have tough time raising the funds. And nevertheless, right, the interest from the domestic investors has been very, very encouraging, right? So we got marquee investors joining us, and also large institutions showed a lot of interest as well. So we did our first close in August of 2020, and final close in this year, right, early July of this year. So, and the journey was very, very smooth actually, right? So we had a room for international, raising the funds from global markets as well, but we didn't have to do that, right? So initial target was to raise 500 crores in India. So we had interest more than that, oversubscribed by at least 20%. So we didn't need to go to the global markets. We closed our fund, and very, very encouraging. India is going through the transformation, in my view, right? Because the initially the service economy to then consumer focused growth. Now, as Kiran mentioned, fund both the institutions as well as investors are realizing the potential in B2B and deep tech areas, right? So very, very encouraging for us as well.
Okay, I'd like to stick to the LP theme for a while. How have the conversations with LPs changed? And you've touched upon, both of you have touched upon this. Do you see LPs in Asia looking to tap more of this opportunity now? And maybe Venkat, we could, you could answer this first.
Sure. No, absolutely, right. I know. When we started the fund, we were, as I said, we were a little apprehensive, right? India, consumer-focused economy. Would they understand the technology? How would they receive it? But now, people understand very, very much, right? So the way the whole digital economy is happening, and the companies adopting the digital transformation, people understand it very, very well, right? And coupled with the technology advances in data side of it and AI, artificial intelligence, right? That's a powerful combination. And we didn't need to explain to any of the LPs about what's happening in the technology, right? So, and many of them had very, very intelligent questions as well. So the whole demographics of the LPs, right? Both their appetite towards toward venture side of it, right, alternative investments, and that too in technology, right? That has gone multifold in the last few years in India, especially. That's our view, and the conversations are very, very, very different from what we had from the fund one, right? So, especially some of the institutions already know it, but when we talk to the large family offices, industrial houses, they are looking at investing in technology and how to leverage these companies for their own benefit as within their industries and companies as well, right? In the co-investment opportunities and stuff like that too, right? So,
sure. Kiran, could you talk about the investment appetite of academic institutions, and do you look at LPs beyond that?
Yeah, so that's the interesting thing. So though our name is University of Tokyo Edge Capital, we don't take any money from University of Tokyo or academic institutions. Like any fund, we are a completely privately funded fund. Most of our LPs are mega banks, security companies, insurance companies, sovereign wealth funds, so on and so forth. The interesting thing is, first of all, LPs are looking for diversification. Second, as you know, more and more companies are staying private, right? So there are this IP to IPO concept, so that you can take the deep tech company from lab to IPO, and several of the LPs are interested in growth rounds for strategic reasons. Some of the times they are interested in pre-IPO rounds and so on and so forth to build a long-term kind of thing. It works really well for us as well. When we are taking a company public in the pre-IPO round, we need long-term institutional investors, right? Who are not so-called tourist investors who are going to stick with the company for a long time. So I think that is interesting. The other conversation we've had is, hey, there is a proliferation. Venture capital is going through an interesting time, right? There are rolling funds, there are solo capitalists. All the growth funds have their seats sort of perspective. Though deep tech is slightly less affected by it, but still so. Like in India, for example, we see some of the family offices coming up and investing in the seed. In Southeast Asia, we have a lot of corporates who are investing, including Japanese corporation in the seed. One of the questions have been, hey, how will you tackle that? Would you syndicate? Would you lead? Those are some of the questions. For example, UTEC's check size is usually $1 to $4 million initially, and then we can follow on up to $15 million. We tend to lead seed or pre-series A in Japan or globally as well. However, in order to understand, we face that there is gap between lab to market, especially in the deep tech. So entrepreneurs were craving for a new product. So we launched a new program internally called UFP, UTEC Founders Program, where we can actually invest less than $1 million. or less than 100K as grant, less than $1 million as equity, or less than 100K as grant for science-based companies to help them get from maybe lab to pre-market. So in the sense, when you see the growth investors coming to seed, we are also going a bit early, right? So I think that sort of thing, those are the conversations that our LPs liked as well, that we get into the company early and support it throughout its journey. And a large fund size helps in that as well.
What are then the challenges in the in this region then realizing its deep tech ambitions? What I'm hearing is that there is enough funding at the early stage for sure. Then what is it that stops us, South and Southeast Asia, from becoming this deep tech hub globally? Is it availability of talent, which has been a perennial issue across sectors? Is it government support? Is it funding at growth stages? Is it the lack of the right entrepreneurs, or is it something else? Kiran?
Yeah, I think there are a lot of good things to talk about. But however, if you want me to address some of the challenges, in the super early stage, right? Like, and as I mentioned, though we are not academically funded, we do invest a significant number of our companies are academic spin-offs. So one of the challenges that we face in the region where US does it well, Japan has been doing it well, and Israel does it well, is how do you cleanly take the IP out of the university and spin it out into a company? I think India and Singapore is getting better. Singapore has to an extent. India is slowly getting better. However, it's not standardized, right? I think, for example, one of the best cases is Google, for example, was spun out of Stanford, and Stanford owned some part of equity in it, but it was super minority stake, which helped both. That sort of thing, I think, is IP commercialization, standardization is something that we would like to see. Second is, especially, for example, Singapore does it well, and India has done it well for life sciences. How do you ensure at least early stage grants to convince entrepreneurs to get started with their product building or started with commercialization? Singapore has several grants. India has life sciences field in India has something called Big Grant, granted by BIRAC, which is Department of Biotechnology. That has proliferated into several, like one of our portfolio companies, Bugworks, initially got that, and then they were funded by US government. So that sort of like helped. That could be done for other sectors as well, maybe advanced manufacturing, maybe remote health. Perhaps there is some other things that we could look at. I think that sector specific, that will sort of help as well. And that is the reason we started UFP grant as well, to see if we can help that. So I think that is good. Third is commercialization itself. I think one of the challenges, it's not the nature of it, is that Singaporean companies, when they start in Singapore, the market is super small. So they got to be global from day one. Is their product robust enough? That's the question. For Indian startups, it's the other way. They do sometimes start focusing on India from day one, which is good. They can make their products robust and go global. However, how do they make that transition? How do they commercialize? So that part, I think, is a challenge. And the fourth thing that we would like to see is slowly, which is happening, is that the emergence of more IPOs in the region. And for that, actually, India and Singapore both are. Singapore, I think recently Temasek set up a fund to invest in pre-IPO companies. To prop up SGX, we've seen some consumer tech IPOs in India. Zomato and a couple of others are coming up as well. Hopefully, we'd like to see more of that region. Japan is a good example of that. It supports deep tech IPOs. I think that is something. Those are some of the things. Regulation is always a challenge. We can get into it if you want, but one of the key things that we work on is, even if it's a regulatory environment, can the startup find a path to commercialization even before regulation? I think that is revenue is important, but especially that customer validation even before regulatory approval comes in is some of the important things. In that, actually, focusing on developing countries may have an advantage, because of lack of regulation itself can be an advantage sometimes. So anyway, so those are some of the challenges. The quality of the entrepreneurs and everything mindset is absolutely fantastic in the region.
Okay. Venkat, do you have the same view on the challenges?
I have probably a little bit different view, but I would categorize these into three different areas, right? One is the talent availability, second is the investment environment, and third is the commercialization, right? So the talent and availability is there in India, right? There's a lot of technology talent, deep tech side of it, but how many of them are, have the, patience and willingness to, come into deep tech areas, right? That is something which is changing right now for sure, because there's a lot of focus on the consumer, technology and consumer areas, right? Consumer focused, startups. Now, that's definitely changing. That's one aspect. Second is the environment, investment environment, right? So today, as Kiran mentioned, there's some grants that are coming in, but there is not a lot of investment going into the deep tech areas, right? And apart from the funds like us, so that's where we think there's a bit of a challenge in terms of the growth of the deep tech companies. Third one is the same thing Kiran mentioned, right? IP to IPO, right? The thing is here, there are certain areas deep tech can flourish in India. One is some of the areas where you focus on the bottom of the pyramid in India. So and ESG, the sustainability side of it as well. There are some business model with the deep tech that can do very well in India. But beyond that, if you look at highly innovative models, they need to go outside India, outside the Southeast Asian markets actually, right, to the developed countries. So do the entrepreneurs, do they understand what it takes to go to those global markets? Is one of the challenges we face day to day, right? So I would say these three areas is what I would say briefly. Some of the challenges we see. We can talk more, right? There are quite a few of them. So I would stop here. Probably I'll give you a chance to ask more questions actually. Yeah.
And I think just to add a point to Venkat, I think the point that one of the things you brought up is very interesting. Several of the times when we lead pre-Series A or Series A of companies in the region, one of the things we think about is who will be the next round investor, right? That's a challenge. For consumer tech, you can show the numbers. For SaaS, the metrics are well defined, right? The ARRs, the LTV to CAC ratios, and the NDRs, and so on and so forth. But for deep tech, that's one of the things I love about deep tech sometimes, because you don't have metrics, so it forces you to develop conviction as an investor. But at the same time, it also becomes difficult for us to convince next round investor as well, right? One thing is like, that is where we tend to reserve, hey, if we lead pre-Series A, maybe we should lead Series A as well. That is one thing. Second thing is we try to bring in other Japanese funds or corporates where they can, like, sometimes the corporates may have slightly more appetite towards it than some of the traditional investors. So Series C, I think, is fine, because at Series C stage, even a deep tech company has tangible, whether it's clinical trials, whether it is revenue, whether it is something else like deals with companies. So that's there. So that's the challenge. There is a, or let me put it this way, there is a gap for a good Series B deep tech fund in Asia.
Is that a gap you would like to fill, or?
I mean, we support it throughout, but the thing is, like, we are not just the only one. There needs to be, we are still pretty early stage, right? We still start super early, but Series B and onwards, there is that I think sort of there is a gap, like a $150 million type of growth fund in the deep tech. But I don't know who will fill that. Probably maybe some mix of corporates and venture capitalists. But yeah, I don't know if Venkat has any insights on that.
No, I agree with you, right? That's definitely a challenge. And second thing is, one more thing is actually in the early stage, right? It's very important to find the complementary skills, right? Most of the deep tech, guys, either they come from academia or somewhere else. They're very good in their technology fields, right? But it takes more than technology to really make a company successful. Finding those complementary skills is a bit of a challenge, right? For some of these founders, that's one of the issues we see constantly, right? So we need to find these, teams, to bring the teams together actually to make them successful.
Sure, we've talked about the.
Yeah,
Sorry, Kiran. No, I was just going to say, let's talk about some of the good things, as Kiran said. What are the opportunities that you see, in this area, in this market?
Thank you. Yeah, I think. Yeah, I'll start. So we see two types of innovations when we say deep tech. One is the science-led innovations that come from R&D labs of corporates or universities. So these are pushing the boundaries of what is possible. There is a fundamental research behind it, and whether it is in natural sciences and physical sciences, aerospace engineering, these are some of the companies that come out of it. So this is that's on the science side. And second, we see on the engineering-led innovations, which is there is no single fundamental innovation, but it's a syndication of medical technology combined with machine learning, combined with embedded technology. This is more on the applied research side. So I think we see both type of companies coming up in India and Singapore. The region, especially, maybe India is slightly more evolved in deep tech than Southeast Asia, at least for now, is that it's a combination of four things from a global investor perspective. First is that probably it's one of the few emerging countries that has a deep tech innovation that can potentially parallel Silicon Valley. Second is, even though India can do that, the cost structure is fairly affordable from a company building standpoint. Third, it has elements of China in that the local B2B market is not super small. It's still big enough for the companies to make the product robust. But at the same time, it also has elements of Israel in that it is, well, Israeli startups are global from maybe day zero. Indian startups are global from day 0.5 or day one. So I think the combination of those four offers us a fantastic opportunity. And I think India and Southeast Asia are a bit different there. So Indian deep tech startups probably solving problems for the bottom 5-6 billion people in the world. Singaporean deep tech startups using the regulatory landscape in Singapore to quickly get out the product and scale globally, Japan, US, and other markets as well. So I think those are the two types of things that we see. And there is a really good synergy. Somewhere there is a good synergy in both. So we have examples of both of that. And our plan is, in order to fill the missing gap, helping them collaborate with either Japanese academia or Japanese corporations, either in their local markets or Japan itself because in most B2B things, Japan is the probably second or third largest market along with US and China. So either helping them expand to Japan or helping them collaborate with Japanese corporates in their local market, or facilitating collaborative R&D between global startups, India and Southeast Asia, with Japanese researchers. Those are some of the things that we do as well. Of course, we also have a dream of seeing if Asian companies can potentially IPO on Tokyo Stock Exchange. We recently saw a Singaporean company do that. We recently saw a Taiwanese company do that as well. So that is something that we are exploring over the long run.
Sure. So from our side, I mean, there are many good things happening actually, right? So and some of the areas we are seeing a lot of traction, I would say, is first is as I said, the areas where the innovation is happening to address the bottom of the pyramid needs in India, right? One is, for example, one of the companies we invested in, Atomberg, right? So they took this energy efficient appliances concept, right? So they started with fan, very ceiling fan, right? So they're going one after the other. So I mean, that's a great problem to solve, right? And then they scaling up very, very well actually right now, right? And some of the other issues are climate, right? One of the companies we invested in, right? They do DG sets part, they remove the pollution and produces ink, right? These kind of problem, they come out of the, as Kiran mentioned, they come out of the academia, but they commercializing it very, very well, right? So very, very encouraging on that side, right? Other areas, in my view, healthcare is life sciences is doing very, very well in India, right? Healthcare itself, right? Some of the areas both on the software as well as hardware, right? Equipment side of it. There are companies coming up with the very, very innovative ideas, right? So that's one area that things are happening out there. Cybersecurity, especially, right? We've seen many companies solving global problems, right? Not only India, right? So on the cybersecurity side of it, using AI and some of it using the devices as well, So that's one of the very, very large potential area for Southeast Asian markets actually, right? So these are the few things, and obviously other area which is basically deep tech companies starting in these markets like India and Southeast Asia, having the initial success here, obviously with the lookout for the global markets, right? So they start with the global market potential. They have the initial success here. They expand to the global markets, right? Especially on the B2B, handling the enterprise sector out there, right? So these are the many good things that are happening, and we are very, very bullish on this side of it actually from India.
Diving a little deeper into that, are there certain specific areas where you think Indian startups have an edge over their Western counterparts? Similarly, is there one area or maybe more where Singapore startups, for instance, may have an edge, and that's where they should focus on, in your opinion? Kiran, maybe you could take that first.
Yeah, I can give examples of portfolio companies. Maybe that's a good way to talk about it. So we have a portfolio company called Tricog, which does AI-driven analysis of ECG, cardiac ultrasound, and other modalities for remote cardiac diagnosis. So they started out of Singapore headquartered, but the technology team is in India. So whereas a lot of companies spend a lot of time in research, what Tricog did was they did R&D and customer development hand in hand. So finding the least expensive, quickest path to the market. So when we invested, their technology was in about a few hundred hospitals treating about 200,000 patients. That was in 2018. Now they have over 6 million patients in 12 countries in 2,000 hospitals. And in all accounts, it's probably one of the largest AI companies that has real world patients across the world. Their large markets is India, and then they expanded to Southeast Asia and Africa as well. And now, rather than directly going to the developed country directly, they're looking at China as somewhere in between. So I think that model is good. What very worked well for them is not just a deep technology, but also the operational excellence. I think just by building in a tough market, that becomes better as well. So they're overall as a product, as a company, they're much better off when they expand globally. And in fact, actually that is helping them when they go to their FDA and other things. They don't just have to show their results based on algorithms. They have real world data to back it up. So that I think is really good. The beautiful story is Tricog is a software company. All their collaborators are Japanese medical device makers like Omron, Fukuda, etc. I think that sort of advantage is really useful by operating in a non-regulated market and expand globally. Singapore, I'll give an example. We have two companies. One is called Opal AI, which is in using AI for commodities as a class. Then there's another company called SWAT, which does dynamic route optimization for on-demand transport, logistics, bus, and so on and so forth. Both of them were able to get started because of the regulatory environment in Singapore, providing that regulatory sandbox. However, they got quick SWAT using that government POCs itself made their product robust and started expanding. The B2G actually was their initial target. And that saw quick. And as when they went to corporates, they were like, hey, does your technology work? Yes, they could show the real world results. That was good. Opal AI, on the other hand, using the Singapore fintech ecosystem, was quickly able to expand globally. In fact, today all their clients are either in US or Europe, all the Fortune 500 type of companies. And for both of them, Japan itself became an interesting market. But for Tricog, while the collaboration was with Japanese corporates in their local markets, for Opal AI and SWAT, both expanded to Japan because of mobility and commodities are both two of the largest industries. Maybe Japan is 1/5 of the global market there. So there we could actually support their expansion to Japan. So along with other things, they have Japan as a second wheel in their motion as well. So I think these are some of the interesting things. The advantage from global companies, I think I like the problem-based approach. It's not a technology searching for a problem. So I think that's always tough. So Asian startups have the problem and they begin that they find, like I call it pain technology fit. What is the customer pain? What is the technology, and easier technology, the right solution to the pain. I think that part is much more clearer, at least in some of the Asian companies that we invest. That being said, we also invest globally. So I think it's good that way.
Okay. Venkat?
So very specifically focusing on the advantages, Southeast Asia, especially India has, right, compared to, global markets is one thing is Indian markets are a bit more tolerant, I would say, for initial product entry and making sure that the product works very well, right, compared to the developed countries. That's one advantage they have. And second is the talent, right, availability. And it's very, very different, right? And if you want to develop a deep tech product, right, it becomes very cost effective for the country like India, right? So to develop a product and test it out, right, in the market, obviously it's a bit more tolerance out there, and then make it work, and then going to the global markets is the model, very well tested and proven out there, right? And the other thing is obviously taking the problem and making it work for large population, bottom of the pyramid. That requires a lot of thought process, and the price and the mechanics is quite different, right? Economics are very, very different compared to the global markets versus here. So the products have to be, you have to think very, very differently, right? Once you make it work in India, I think other markets, becomes a bit more easier to enter in my view, right? So these are a few advantages, you have compared to the global markets, right?
Sure. There is a school of thought, and I'm going to talk about the venture model. There is a school of thought that believes that deep tech investments, because of their inherently risky nature and the longer time frame needed for exits, that makes venture funds structurally unfit to support the sector. There is also a call for newer investment models that that could allow for more funding to flow into this sector. What are your thoughts as venture investors? Venkat.
Again, right, I would say, deep tech investments are probably a little bit more longevity, but at the same time, right, every investment, as they make progress in their life cycle, has got their own takers, right? So, I mean, to prove the technology, it might take a little longer, but at any given point of time, probably there is as Kiran mentioned, you need Series B fund in deep tech, but once the products have reach some stage, there's always takers, right? In my experience, it might take a little longer, but venture industry is fine in the deep tech, right? I don't necessarily think, right? So it is not fit for venture funding. And given that even today, even regular exits are taking longer than what it should, right? If you look at the statistics, many of the venture funds have taken 10 years or so, right? So, and so I don't think there is any notion that venture funds they're misfit for deep tech. That's one, right? And beyond that, new instruments, yeah, I mean, if it makes it easy for the regulatory perspective to attract more capital, right? And that would be a very welcome step, especially in the developing countries. There's a bit more of a regulatory overhang, in my view, to attract the capital. So if there's an instrument that will make it easy to attract the investment, that would be very, very welcome in our view, right?
Sure. And Kiran, before you answer it, maybe I'll add one more question. Do you think deep tech investors are a different breed altogether?
No, so I think we are all, I would say deep tech entrepreneurs are a different breed. Investors are okay. So I think the maybe 2 points about it from others. One is my learning. The other one is from a fund perspective. So I'll share both on the deep tech investing in general. One is I think I mentioned the science-led innovation and the engineering-led innovation. So my own investment thesis has been a good mix of both to hedge the portfolio. For every investment in an atom, I have an investment in a bit. So I think that kind of like one may have a 2-year path to commercialization, the other may have 5-year path. I think that is something that we balance it out as well, which is good. Second is from a fund perspective, we've invested in over 100 companies over the last 15 years, setting up risks and milestones for deep tech companies. At the end of the day, like I think it was maybe Kleiner Perkins at least, or Tom Perkins, who said during Genentech that venture capitalists at the end of the day is a project manager, especially in the deep tech sense. So that is very helpful. So I think among the startups, like every startup has a team risk and there is a commercialization or a market risk. Every startup has it, deep tech startups have it as well. Along with that, the other risk that deep tech startups have is one is technology risk. Hey, will this technology work? And second is the product risk, right? Maybe the technology will work. Can it be actually productized in a milestone-based manner in across the time and space, right? So that's the second risk. Third is, I think Venkat brought it up, regulatory risk. Is there a path to market without regulation, or what's the sort of like? And fourth is the capital risk. I think addressing those as we proceeded and thinking it holistically from day one, we don't have to address it, but as long as we know about it, I think setting up those risks in the 4 specific risks that I talked about for deep tech companies, I think that helps up. And aligning that risk alignment between investors and venture and entrepreneurs also helps us think through as we go along, I think. So I think setting up that risks and milestones has helped a lot from our perspective.
Sure. You've talked about some of the successful companies in your portfolio. What were some of the non-successes? I wouldn't call them failures, but that led to you sharpening your investment thesis. Could you share some examples? Any one of you?
I can go first. Okay, fair enough. So again, right, and unfortunately, so far, none of the companies we have invested have gone to close the shop yet, right? So, but at the same time, right, there are definitely, we learned a lot of lessons out there, right? Some of it is looking at, as I mentioned before, in the deep tech investments, there's a technology piece and there is a managerial and as Kiran mentioned, project management and the entrepreneurial side of it, right? So most of the technology folks may not have those skills. So complementing those skills with the right founders is a difficult task, right? We have seen it in practice, right? When there's no combination out there, the path to commercialization becomes very, very difficult, right? So that's a lesson we learned. So when we are evaluating companies, we look for the two dimensions of the equation, right? One is the technology, other is a path to commercialization, right? People need to be there. That's the first thing we look for, right? For sure, right? And then how do they mitigate the the risk as you move forward, right? Because standing their ground, many of these entrepreneurs, right? They tend to give up too soon as well, right? So something we need to look at, right? What they have in mind, right? And then obviously other things such as market size and how they handle the situations like black swan events, such what happened in the last 2 years, right? Those things are unexpected, and how do the companies how do they handle these kind of situations, right? So those are the things we definitely look for, right? So these are the lessons we learned over the last few years in terms of investing in deep tech companies.
Not very different from what Venkat mentioned. I think in our experience too, the challenge of venture investments in general is, this is my 4th year as a venture capitalist, the companies that fail early. The companies that do well take a long time. So it's a reverse feedback. So it's a tough one. But doing technology development and customer development hand in hand, maybe that is probably the single most important indicator for deep tech startup success. Even though, let's say they're a drug discovery company, they may get the drug out after 8 years, but it's never too late to talk to customers from day one, right? I think that has been any company which says, okay, we'll build the technology and then sequentially we'll build the product and then maybe we will talk to the customers or they will come, and no customers will ever come, unfortunately, right? So I think that is where we focus a lot. And actually we have 5 internal recruiters within the fund to help our portfolio companies to build the team from day one. We all use our networks as well. So I think doing that customer development and product development hand in hand, that's been, if anything, that's been the single largest indicator of success from a fund perspective for us.
You both have talked about exits and the importance of IPOs. How big of a challenge are these for deep tech investors? And we've seen exchanges in Southeast Asia launch measures to improve their attractiveness. You've talked about the Temasek Fund. Do you think these measures could also help deep tech companies? What else could governments or regulators do to ease the path to exit?
But yeah, I can go first. So I think India is now thinking of like Japan has what is called Mothers. First section is for the large companies, but Mothers is a startup exchange model on NASDAQ, which is conducive for startup IPOs, which values future growth and not just the past profitability, for example. I think that is, and has enough liquidity to support deep tech companies. So I think those are some of the things that like India is trying to develop. I think it's called NSE Emerge or something like that. So I think India is trying to develop that. So it doesn't have to be always $10 billion IPOs. Even a $500 million IPO is really good. For example, in Japan, we had a company called ACSL, which is a drone company, my colleague's portfolio, which IPO'd. It became the first drone IPO in the world a couple of years back. And I still think it is the only public drone company in the world currently. So even with $7 million of revenue, they could go public because the country valued that. And I think that sort of thing is always good. So that's another. So you don't have to always aim for $10 billion, maybe even $1 billion, $500 million exits are good. So that I think is positive. And second, we do see the appetite from corporates, right? I think global corporates acquiring startups, especially deep tech startups in the region, that is emerging as well. There are companies like, for example, Grey Orange, an Indian robotics company, is I think already close to $50 million of revenue. We have a portfolio company called Pugworks, which soon will become the first ever Indian company startup to take a drug into clinical trial in Australia. So I think those are the things that are coming up. So there is always, you build for IPO, but however, probably you may get preempted during an M&A. So that is something. But probably there could be a more concerted effort from the ecosystem as well to sort of like come together. The ecosystem is already collaborative, and I think especially governments making it easier for IP-led companies to operate across the borders, whichever headquarters, whichever subsidiaries. I think those some of the things the operational things, because startups already have things enough. Deep tech startups have it even more difficult. So the least we can do is to make sure the operational aspects become more like on an autopilot rather than becoming a barrier. So yeah, that's our view.
Yeah, from my side, if you look at as early stage investor, right, our exits would be sort of split halfway, right? 50% would come from corporate strategic acquisitions, and 50% would come from probably 220 funds, right? Future funds giving us exit as well, right? So, that's been the trend. We've seen that happen as well. And beyond that, lately, one encouraging trend has been the IPO. IPO market is very, very healthy, right? A lot of good things are happening out there. So I think it gives a lot of motivation, I would say, for young entrepreneurs to look forward for IPO. Because as early stage investors, we never thought about IPO as an avenue, right? Now things are changing for sure, right? So, and secondly, the whole SPAC market, while there's a mixed feeling about that, right? But one thing is there, it has shifted the thought process for many entrepreneurs, right? And even today, early stage companies thinking about how to use the new instruments coming in, whether it's a SPAC or otherwise, right? Other markets, including early stage, listing platforms, right? There's definitely a lot of thought process evolving. I think we are very, very, very encouraged by what's happening on that side of it, actually.
And just to add to Venkat's point, the private markets always used to be narratives driven. The public markets always numbers driven. I think that has changed significantly. Like public markets are also becoming narratives driven. I don't know whether it is good or not, but at least for deep tech companies, I think it's a positive sign. So you see like all the flying car companies with no revenue, but significant potential, as long as they have substantial thing going public. We see of 3D, I think Desktop Metal, the 3D printing companies that go public. We've had several of our companies in Japan, drug discovery, advanced manufacturing companies go public as well. I think that in general is good. There is a sense that you need Moderna, Tesla type of companies as well, and not just the Ubers and the Zomatos. Nothing wrong with it. So I think the public market also, it may be easier for a deep tech company to raise 50 million, 100 million in public markets rather than private markets. So I think that is emerging as a way as well.
All right, that's all the time we have today. Thank you so much, Kiran and Venkat, for all your insights. Appreciate you joining us. Thank you so much.
Likewise, thank you. Thanks for your time.
Pleasure is ours. Thank you.